If you're ignoring the signal the market is sending right now, you're about to get shaken out right as nation-states are secretly buying in. And get this, while retail investors are panic selling a record $2.7 billion from BlackRock's Bitcoin ETF, the firm is quietly telling insiders this is their most profitable product launch line ever.
So stick with me, because by the end of this short explainer, you're going to know exactly who is on the other side of that trade, what their real strategy is, and most importantly, what it means for the future of your portfolio.
Okay, let's dive right in. First, we've got to look at the surface level data that has everyone, and I mean everyone, running for the exits.
Here it is, the big, scary number. Bitcoin has officially broken below that key psychological level of $60,000. You know, for a lot of people, this was the line in the sand. So seeing the price fall down to around $59,000 has triggered some pretty widespread fear and a ton of liquidations.
Now, this fear seems totally justified when you look at the ETF data, especially when you look at the biggest player in the entire game, BlackRock. Just look at this chart. We're witnessing the heaviest outflows since these ETFs first launched. What you're seeing here are the net redemptions from BlackRock's IBIT Bitcoin ETF over the last 5 weeks. That's more than a month of just relentless, consistent selling pressure. And the scale of this is it's massive. We're talking about over $2.7 billion being pulled out by investors. This isn't just a small dip, folks. It is a significant wave of selling. So what is going on here? Well, the experts are calling it a retail deleveraging. What does that mean? In simple terms, it's the everyday investors, the people who maybe got a little too excited and bought in on leverage during the highs. They're now being forced to sell to cover their positions as the price drops. It's a classic textbook volatility shakeout. But, and this is a huge but, this is where the story takes a fascinating turn. Right as this massive sell-off is happening, BlackRock executives are on record saying their Bitcoin products are their most profitable ETF line on the entire planet. They're making more in fees from these than from their traditional funds. So how on earth is that possible amid record outflows? Well, that brings us to the most important question of all, doesn't it? If billions of dollars are flowing out and retail is selling in a full-blown panic, who is buying? Who is on the other side of these massive trades? And this right here is where we get that piece of insider information that flips the entire narrative from bearish to, well, incredibly bullish if you have a long-term view. The answer comes directly from the top. The CEO of BlackRock himself, Larry Fink, has confirmed it. Sovereign wealth funds. We're talking about nation-states, actual countries. They're the ones buying. And he says they're not just buying. They are adding incrementally at these lower prices. They're strategically accumulating. And this slide just illustrates it perfectly. There are two completely different games being played in the market right now. On one side, you've got retail investors who are reacting, often emotionally, to short-term volatility. And on the other side, you have nation-states treating Bitcoin as a long-term strategic asset and using this exact volatility as their perfect entry point. For them, this isn't about next week's price. It's about hedging against currency debasement and diversifying their national reserves for the next 100 years. If you're getting value from this kind of deep dive analysis from us here at Crypto Global News, please take a quick second to like, share, and subscribe. It helps us a ton. So the huge takeaway here is that while retail is getting shaken out, institutions and even entire countries are moving in. So what does this actually mean for the future of the market? Well, this institutional hug is really just getting started. Senator JD Vance has pointed to a super bullish outlook predicting that Bitcoin ownership right here in the US is on a path to double from 50 million to 100 million Americans in the near future. Think about that. That is a massive wave of new adoption just on the horizon. But this big shift also comes with a pretty stark warning, this one from investor Kevin O'Leary. He's predicting a massive consolidation. See, this isn't a tide that's going to lift all boats. He believes that capital is going to flee from thousands of those altcoins that have no real utility, driving them to zero, and it's all going to consolidate into the market leaders. So you see, this volatility, it's not just random chaos. It's actually a filtering mechanism. It's designed to shake out the weaker hands. It drains the life from projects with no real purpose, and it forces capital to flow into the strongest, most secure assets out there, like Bitcoin and Ethereum. This is the great consolidation happening in real time.
which really leaves us all with one final critical question. As nation states are buying the dip and the market prepares to consolidate around the strongest assets, you really have to ask yourself, is my portfolio positioned for this future, or is it exposed to the shakeout that's already underway? Thanks for tuning in, and make sure you hit that bell icon for regular updates so you don't miss the next major market signal.
Stay ahead in the crypto market. Subscribe now for the latest global news and updates.